Hi there, Shingirai here again with an update on global current affairs. Coming into this week, we've had two major winners with the US equity markets. Of course, the S&P 500 in yesterday's cash equity trading has managed to erase losses on a year-to-date basis. Brent crude has been another winner on the back of news that the OPEC Plus countries have decided unanimously to extend the oil production output cuts by a further month going forward, and that has really supported the commodity for on yesterday's cash equity trading. In terms of decomposing what we see as key themes, risks, and opportunities going forward for the US equity market, I think one point to really look out for would be whether the current levels of valuations by price earnings ratios would be sustainable going forward, given the downward adjustment of US equity earnings forecast for Q2 and Q3. And of course, we'll be looking at whether the employment data that we saw at the end of last week for the full month of May, which was a bit more positive than we would have expected, would be sustainable going forward, especially with the consideration that some workers have been laid off temporarily, and of course firms will have to make big decisions in an economy that will be reopened going forward on where the current levels of employment or staffing are sustainable in the current environment. US equities, of course, enjoyed quite a major support from the US Fed, which by measures of liquidity of an M2 money supply, which saw the highest growth that we've seen since back in the 1960s when the Fed started recording these figures. We would also be looking to see if the reopening of the US economy and people returning to work would lead to a potential second wave of the COVID pandemic outbreak. And of course, that would not bode well for US equities going forward. In today's cash equity trading, Asian markets closed in the positive, whilst currently in today's trading, European equities are down more than 1% by measure of a FTSE 100 and the Eurostock indices. US futures have also reverted to negative as some bearish sentiment begins to kick in there around concerns whether the US equity markets have overshot potential recovery of the broader US economy.